Do you have your own channel? Because
YouTube, yes. I've just started, so you'll see we're still losing there.
I'll take it. We'll talk about it.
Yeah.
Welcome to another edition of Mindset Profits. I have another special one for you today because I found a brother who's been trending. Hey, he is trending. You are trending.
Is that what you call it?
Teaching some good stuff.
Awesome, man.
Ex-SARS employee. You're teaching a lot of the tech stuff that people need to know. You're teaching property. What else are you teaching?
Yeah, well, mainly financial literacy.
Financial literacy.
Yeah. So because that there on its own, it's a different ball game, I always say. Because financial literacy is about understanding financial flows.
Yeah.
More than, because I mean, when people understand tax, we've got a lot of people that are tax specialists. It doesn't make them, wealthy people or moneyed people for that matter. You've got a lot of accountants, and that doesn't make you. So I'm just trying to, yeah. So when you then have financial literacy, you have a mixture of those where you actually make use of them to your advantage.
Okay.
Yeah.
Mandilakhe, welcome, man.
Thank you.
How did you get started on this? Or what does your journey look like? How do you introduce yourself? If we gave you a podium and said, Mr. Mandilakhe, introduce yourself.
That's a good word. So I always say it started with a dream. It sounds cliche. Yeah. Because that's what they all say. Okay. Yeah, but it did start with a dream. So I come from a very broken background.
Yeah.
So when I was born, my mother didn't have a house of her own. Never saw my dad before I was 12. So I had a longing to stay in a house of bricks and mortar when I was growing up, because we lived from one family house to another. The whole thing. I've actually talked a little bit about my story. So that gave me this longing for me to get my own place for my family. By the way, my name is Mandilakhe Ikaya. So it means let me build my home.
Okay.
Yeah. So it seems
like
to
that's a name. That's ID full.
No. So it's not full in ID.
The name is
it's just Mandilakhe. Yeah.
But the meaning.
of it is Mandilakhe Ikaya.
Makes sense.
Yeah.
Now I was getting worried. They put the whole.
That's like a sentence right there. No, remember, Home Affairs does not have enough patience for that. Yeah, so it started there. Then, so the biggest dream I had was to have a house for my family. Didn't know that I was actually aiming to get involved in the property investment space, actually then become more interested in financial literacy.
Okay.
Yeah.
And when we're chatting off camera, as you said, your first property, you had a name for it.
Oh, yeah. So I call it my best first mistake.
I didn't want to be the one saying
Yeah, so that was in 2012. That was my best first mistake. And I think I'll unpack it as we continue, unless you want me to unpack why that is the case.
We can start there.
Yeah.
Because we're going to go to a lot of mistakes that people are making with their taxes. This is not the only video that we're going to make with you because you're such a pro.
Thank you.
This is going to be one of many. So we'll talk a bit about mistakes that people are making with their taxes, some that are easy to fix, that you can go and fix and start looking into now, so you never got caught on the other side of the law. But we'll also talk to a lot of what you've learned going from working for SARS into property investing.
Oh, perfect, man. I look forward to that.
I think the first beautiful mistake is a good place to start.
Yeah.
What do you mean by that?
So I had just started working. So I actually started working in 2009. So I did a BCom accounting degree after that, and then I went to an audit firm. So I actually was an audit article clerk. Right after 3 years of that, I went into SARS because that was like something that I thought this right here is interesting. For sure. I mean, the guys in the firm I was working for had different ideas, but I was like, actually, I want this. Let me jump ship. Right into my first few months at SARS, that was 2012 now. First few months at SARS, I was like, now this is time for me to buy my first property, because that's the main goal, right? And I don't want to specify how much I started, but I went to the bank. Before I went to the bank, a friend of mine who was a doctor at the time, actually, it's a lady, by the way. So she owned her house at that time. But remember, doctors earned way more than I did at that particular point. So, but she could see that I had an interest in actually getting a house. Showed me a development, went to that development, got the price, went to the bank. The bank asked for my payslip. Like, here's my payslip. Bank checked for me. It's like, oh, okay, cool. We can, if ever your employer gives us a letter that you're permanent, then we'll actually consider you for this. Affordability should be fine. I'm like, sure. The bank is not going to tell you, have you considered the levies? Have you considered the rates and taxes? Have you considered the security? Do you get my point? So
That's on you.
that's all on you. So I'm like, great. I take my payslip, take it in there. I afford this house. Bank gives me the money. I buy the house. I stay in the house. After the first installment,
Your trauma was that fast.
after the first installment, I was left with 1,000 rands in my bank account after paying everything. Remember, this has to take into account my transportation to and from work. I haven't bought groceries. I'm telling you. So right there, you can see what I'm saying. That was my first best mistake. But I was young enough. I think also one of the things I learned.
I'm still stuck with that.
But it's good that I'm still alive, eh? So many years after that, it's what, 13 years now later. Yeah.
Goodness. How long did the season last for you? And how did you come out? Because that's such a tough one.
Yeah, it is. And so how did I come out? And that's a very interesting question. I then learned that my salary is not going to be enough for me to, and in me considering that my salary was not going to be enough, I knew that a raise is still not going to be enough. So
Because they'll hit you with 8% or something.
there we go. So I knew that I need to do something besides just getting a salary now. Oh, then the entrepreneurial flair had to come up. Then I had to think of side hustles.
Yeah.
I did a lot of side hustles, but I've always done public speaking. So I would find ways to make use of that. And at that time, I actually got blessed with a bakkie by one of the families that liked how I was carrying myself. So, I had one of those old Volkswagen bakkies, golf bakkies.
They gave it to you.
They gave it to me. Yeah, well, we'll talk about that some other day. Yeah, I know that there's still some good people out there, and because of, so I didn't grow up in church. I don't want to sound like I found church from family.
Yeah.
I got born again at 13. So then that influenced my life. So I spent a lot of time in church. So, and I must say, in the church space, generosity is one of the things that exists. So, and also I think when people see that you've got a vision and the capabilities, they tend to come around to support you. So this was
Depends
one
on
of
the
those.
church.
Oh yeah, you're right. Depends on the church, mostly in our day and age. So yeah, so then I would use also the bakkie to try and find ways to actually put more on what I actually had.
Oh, interesting. Oh, so even during that time, you didn't think of selling the house.
Oh no, selling was never an option. Yeah,
You were going to figure it
no,
out.
selling was never an option. Selling, losing it. So I'm very responsible, and that's one of the things I try to be responsible. Maybe this reminds me of this story. I don't remember which book it was, where this guy says he's telling this story of this soldier that took his team to a battle, and then when they got to the battlefield, he actually told them to burn their ships, right?
Yeah.
And then after burning them, he said that was your way back home or your way out. Now that you've seen those going up in flames, you're either going to have to conquer this or you're going to die trying.
Yeah.
So that's a similar thing. So when I go into things,
Bend the pots.
I bend the boats. So that was that. I actually, now that you ask, I've never thought of, maybe I should sell this, or I had actually
Because it
beaten
could have solved your problem.
Yeah.
But I guess looking at that situation in hindsight, it would have created comfort.
Yeah. And it would have been a sign of defeat, by the way. Because remember now, I don't know when next I would go for a house. Maybe I'd say I just don't afford, or I'd actually be
Do
scared.
you ever get people who approach you for advice who are in that situation and maybe don't have the entrepreneurial resolve and wisdom that you have, that actually do need to sell the house because it's gonna get worse if they don't?
I don't know. I don't want to know. I don't know if there might have been someone who's asked me. I would generally talk about my experience. And then if ever people then get into the nitty-gritties of their finances, I always believe in the more official protocol. For example, I believe that I should have also used a financial planner or financial advisor to deal with that. So I always tell people my content is not financial advice. It's financial literacy, so that I'm not followed by the FSCA to say.
True, and they're coming for financial influencers.
Exactly.
Now, I don't know how heavy they're going to be, but one of the things I highly recommend as well, I think whenever I get the opportunity, is get a financial advisor.
Yes.
Your situation is unique.
That's very true.
Your numbers are going to look different from some principle that looks very good to apply works differently if you are drowning in debt.
That's true.
It works different if you've got a mashonisa after you. They'll kill you and you'll be running to invest because you got excited in a seminar.
Sure.
So you might need a pro to look at your finances and guided by the law.
Very true.
You work things out there.
Very
All right, so you came out of that one. At what point did you then decide property is going to be the play for me?
That, while still in that scenario and situation right there.
Yeah.
So one of the things I did, because it was a 2-beds that I bought with a lounge and all of those, I realized I'm actually using part of that house, not all of it.
It was that big.
It was not big, but it actually had facilities.
Okay.
Because I would go into my house literally and go into my bed. So I didn't cook a lot. I was a single guy. So I would actually just bring in my takeaways, go into my room, probably open up my laptop and work or whatever. So I realized I don't need the other space. And guess what? I could rent out the other room. And I did.
That's something I should have thought of actually when we're doing another episode with Percy.
Oh, yeah.
On how to manage hard times or when you're in a recession. That there are people that have big houses. They could rent out one of the houses. It's a good tip.
No, it was. It was. And it worked out. Guess what? I actually, I got a tenant who was paid for by McDonald's.
Oh, okay.
I got a corporate deal. And we stayed just fine. That's when I started seeing then. That's why I'm saying it was my best, it was my best mistake. First best mistake that I made. Because I then knew then, okay, there's revenue generation here. Now, firstly, I'm cutting part of my bond repayment. Now, from that being left with 1,000 rand, I'm already sharing my bond with this person. And also, now this actually gives me ideas around. So when I'm doing my taxes now, a certain part of my house is doing business. Now, certain my expenses are for business purposes. Do you get my point?
It's good that we're talking tax today because that's such a beautiful and powerful point.
Yeah.
But we'll explain it a bit more.
Yeah.
So that was the benefit that you saw then, but still, how did you then decide that I will go full time into property and buy other properties?
So it was later on. So after that, I only bought the next property in 2020. So that was 8 years into it. And I then learned, because I think that for me also spoke to the importance of starting small, because I could then see all the different angles of doing property on a small scale. My risk was very small, very limited before I could go big. So when I went into our next property then in 2020, I knew all the aspects of buying property. Then I went fully fledged, and then I bought more until we actually got to now. So at this particular point, and also for another episode.
Yeah.
Because this spoke to the increases in my personal salaries, right? So one of the things I always tell people, our salaries are really the seed that we're supposed to use in order for us to get assets that will generate the income that we use to sustain our lifestyle, right? So when I would get then these increases, one of the things I saw is I'm actually increasing my tax bracket. So I'm paying more taxes.
Yeah.
And SARS, no, I love them. I'm just so
You work
I'm
for
not
them,
exactly so. But what I'm trying to say is one of the issues I had was the fact that I will never see this money again. So the more money I'm paying, yeah, I love being a good South African, but hey, listen, I think I could make better choices with my money when I control it.
Yeah.
Rather than for me to say, oh, I'll entrust the government to build the roads for me. Yeah, you know what? Okay, yeah, that's a conversation for another day.
I got you.
Yeah. So,
All right,
so that, yeah.
You saw that when you buy 3-4 properties, with each of them now you're declaring tax and it's shifting your income, your tax bracket. What is the next move to solve this?
Okay, so it was actually going into then buying investment properties. So after buying my primary residence, I go into buying investment properties. Because why? So once you have any other income as a taxpayer outside of being an employee, you become what they call a provisional taxpayer, right? So a provisional taxpayer allows you to deduct, to claim more deductions from SARS, right? So with the salary that I was earning, I knew that in order for me to move away from just losing this money into this abyss where I'm not going to see it back again, I can claw back on that by investing in investment property, incur some form of assessed losses by investing in properties that I would buy directly from the developer, because there are no transfer duties and all of those things. So your costs up front are minimal. But then you can also get, you normally start on a cash negative there. And that's something I want to talk about.
Oh, yeah?
Because you start on a cash negative and people think that that's a bad thing. It's not a bad thing, because that cash negative enables you to go and claim from SARS when you're doing your annual submission, your tax returns, right?
Even as an individual?
Yeah, mostly as an individual. Because when you do then your annual submission, then you would have actually had your employee's tax. It would have been paid by your employer. Then you actually get to bring in the income you've made from the rental, your rental income, right? And all the expenses you've incurred from the rent, from the interest on the bond that you've actually been paying on a month-to-month basis. By the way, that's between 85% and 90% of your repayment. So if
Especially in the first 10 years, right?
Yes, exactly. So if you can take that and reduce your rental income with, then you take into account your agency fees, take into account your levies and rates, your rates and taxes, your levies, your garden services, your insurance, your all of that.
All those are written off.
All of those. You claim those against that rental income. You are bound to go beyond the rental income. Then you actually get to take that loss, then you actually claim it against the employee's tax that you've already paid.
Goodness.
Then you end up on a refund state.
It sounds too good to be true.
I am telling you.
Let's break it down.
Yeah.
For someone who's working, they just bought a house.
Yeah.
Try and run down what their tax structure looks like, their tax situation.
Yeah.
You've got a job, you've got a salary, 20,000. You're going to pay the bond for this property, maybe 10 or something.
Yeah.
What does that look like?
So this person has bought an investment property, or is it?
Investment
Okay.
property.
All right.
But they're still full-time employed. So all
Yeah,
they
they're
have
full-time.
is a salary and this property.
Fantastic. So what happens is they're going to definitely get their employees' tax calculated already by the employer. Let's just say they're going to pay 100,000 just to make it palatable.
Yeah.
So they're going to pay 100,000 at the end of the year, employees' tax.
Yeah.
That's something that's there. You can't do anything about that. It's standard.
It's there, yeah.
Then you go and buy a property that's going to give you, let's just say 10,000 a month, right? So you actually get 120,000 at the end of the year. And then on a month-to-month basis, let's just say your expenses. So you're getting 10,000. Let's just say your expenditure after taking into account everything with your interest expense, just the interest expense. Because this is the other mistake people make. They claim the full bond repayment. In there's a capital amount, so you must take out the capital portion. Only deal with the interest expense. Then, so let's just say then their monthly expenditure, it gets to like 15,000. just to be safe. Now my maths is going to be, but then we take that 15,000 by 12.
Yeah.
So you have 120,000 for your rental income. You have this 15,000 by 12. The 150.
All right, so you're
plus 30.
calculating all of them for the year,
For the year.
not per month.
Yes, so you have 180,000 expenses, right, that you've incurred. So that also speaks to the fact that you're supplementing, right, on a month-to-month basis. Then you have a 60,000 rands loss. You've got 100,000 rands employees tax that you've already paid because of your employers already doing that.
Yeah.
Then that 60,000 rand there, depending on what your tax bracket is, you're going to take that 60,000 rands loss or of a difference multiplied by a tax bracket. So if ever it's 40%, let's just say if there was a 50%, was a 50%, I'm trying to make this thing easy.
Yeah.
Then 30,000 from that loss would reduce your 100,000 to 70,000. Then that's the tax you should have paid for your employees' tax. Then 30,000 is due to you.
I got you. Okay. So are you saying, therefore, it's still the same if you buy a property under your name? It's not a big advantage to buy it under a business.
You see, so I know that's the question that a lot of people always ask. So, so I always say the objective is very important, because you can only claim these expenditures or this expenditure against your employee's tax if you bought the property in your name. Now, I know that there's a risk of dying, estate duties and all of those things. That's a different story. You have to do your cost over benefit assessment yourself. When you put stuff under a company that's going to be owned by a trust, that's structuring because you're going to run that as a business. And your main concern there is estate duty, continuation, and also anything happening to you. So that risk you have to weigh yourself to say, what is my objective to actually do that? So you can start there, but then you're going to have to find out what are the other opportunities you're losing out on when you actually choose to put your property under a company or under a trust.
So you're saying it's more or less the same, just depends on what your priorities are.
Yeah. So your risk appetite is what's very key.
Okay.
Because, so when you then want to reduce that employee's tax, you can't put it in a company's name and then want to get that benefit. It has to be in your name.
So the shifting to a company would apply more to someone who is like an entrepreneur.
Yes. That I always say. If you're an entrepreneur, this is actually your way of living. Put it in a company.
Okay.
But if you're an employee, you're trying to generate wealth. Because actually, I was seeing a video recently. Somebody had done an assessment of, an analysis of billionaires that exist from whenever, I don't know the time frame that they used. But they said they were using percentages to see people who were coming from different spheres in life. He actually said the biggest portion of that were entrepreneurs. There was not one employee that was a billionaire on the list that he had actually been looking on. What am I trying to say? Employment has not always guaranteed, or I don't even think it guarantees wealth. It guarantees security. You will have something on a monthly basis. But for you to build significant wealth, you need to have something that's beyond just employment.
Okay.
You need to have some level of entrepreneurship in your endeavors.
Your side hustles, were they around properties, okay, or somewhere in other things?
In different things.
But I can't tell you some of them.
Yeah, no. So I mean, even now, with a colleague friend partner of mine, we actually have invested in chicken farming, poultry.
Oh, okay.
That's one of the.
Also, this hasn't stopped.
No, it doesn't stop. So remember, so that's why I always make this statement that I don't want to be boxed in being a property investor only, because I'm going in there to extract resources, to diversify when I can, because there are other things that grow faster than real estate investment. And real estate investment can be illiquid. So you need to have then other things that are going to turn around quicker.
True.
Then,
Well,
yeah.
I know that because I coach entrepreneurs. The capital you need for real estate is so much more than what you need to start a business. And a business can generate more faster if you know what you're doing.
True.
All right, so let's talk about some of the mistakes that you've seen people make. You already mentioned one of them, that when they're claiming for tax, instead of putting interest, they put the whole installment.
Yeah.
But what if someone says, I don't know how to separate it? If I'm paying the 9,000 per month, that's what the bank is taking. How do I know how much is interest there? I don't know how to separate. So SARS, I'm claiming all the 9.
And that's normally something that people would say. So I always think, before I say, I always suggest, tax practitioners come in very handy there. Tax practitioners are for us to actually just do away with or actually give you a hassle-free process in terms of doing it right. Because, tax mistakes have punitive measures.
Yeah.
So you put in, for example, back in the day, people used to make mistakes with the medical aid expenditure they've incurred. They would put the cents in their tax return form, and that thing didn't have space for cents. Now SARS sees you like you're claiming way more than what you've actually spent, and then people would just get penalties. So do you get my point? So it's very similar here. So it looks like, and remember,
that's not there anymore, right?
Depends. I don't know. I left. So I hope, but so the less mistakes we make on that return, the better. So that's why I'm always saying tax practitioners don't cost much. If you're doing one return in a year, you can actually pay them. It's not a significant amount. They actually prevent those. Or when you're doing your submission, make use of your bond statement and look at the breakdown, because they have that. So they break it down. They break down the interest portion, and then they break down the capital portion. So people must learn to use those statements, because for the first year, it might make sense. Third year, no, we're not expecting you to make the same mistake. Yeah, that's when it actually just comes to the submission. And I know it's a very onerous process.
Yeah.
But once you get a hang of it, it becomes easy.
What about, have you seen people who treat side hustles as gifts, side hustle income as gifts, and don't declare it?
Oh yeah, there's a lot. No, there's a lot. And I think that's one thing that's plaguing it's mostly our people. I'm saying our people, mostly the Black nation. I think we have relied on people's opinions way more than the law itself. So some of the comments you would get when you're talking about property investment and talking about using the bank's money rather than using your money, you get people that are saying, yeah, no, I bought cash, so I got peace of mind. I don't know anyway. And one of the things, if ever that's investment property, and I've always said this to them, if it's investment property, most of them don't declare the full amount. Because if you bought it cash, your full rental income is at SARS disposal. So they're going to tax you at the rate that you are in on that full rental income. While someone who has a bond, there are many benefits there. That on its own. So while someone has a bond, they've got that interest buffer. So they don't get taxed on the full amount.
So someone who buys and pays off the one house, and then refinances that to get another one, is now in the advantageous situation you're describing. Yeah.
Because that refinancing actually gives you debt, then it guarantees you more. It guarantees you more interest. And the nice thing that people don't see in that, because they're like, it's still debt. Oh yeah, it's still debt. You didn't do anything for it. You actually just have a property that actually has appreciated in value. Now you want someone to actually fund you for it, right? So that's why you go to the bank and say, listen, I've got an asset that has more value than what I owe for it. So I need you to just, instead of me selling this asset in order for me to actually get that equity, give me that money as debt. I'll put it in something else. Then you actually take that money, you go and deposit another house. Guess what? In the other house, the deposit that you have in there is yours.
True.
And then you actually get to pay the remainder.
What about deductible expenses that people are not aware of? Have you seen some that I think you've mentioned a couple as well
Yeah.
now. The interest was definitely one of them.
Yeah.
But some people are not aware that they can write that off against their personal tax.
Correct. And also on the deductions that people don't understand.
Yeah.
Once you get to 5 properties that are rental
Yeah.
properties, there's a section in the Income Tax Act, in the Capital Allowances, Section 13. It's called Section 13 SEX. So it's Section 13 SAX, right? And it exists.
It's written like that.
Yeah, it exists. It's there. So after this, you can go
I'll
Google,
Google it.
yeah, Google, and then check that. Once you have 5 investment properties that you're renting out, SARS gives you 5% deduction on an annual basis on the value of those properties, of each of those properties. So you can imagine if you have $1 million rands worth of each of those properties, you've got 5 million. So you put 5% on each one of those. It's about what? It's about 50,000. So you get, now that's a deduction over and above all the other deductions that you have. And now you're actually reducing further that employee's tax that's already paid there. This is very much the same as, so this is very much the same as when people go and increase their pension fund deduction from work. People don't understand that if you ask your employer to deduct more than the company policy, for example, if the company policy is 7.5, you say deduct 10% on my salary, you're bound to have a refund on an annual basis because of your company calculates the employee's tax based on the company policy. And it deducts the tax according to what everybody else is paying. But then at the end of the year, you can prove that I've paid more pension fund than everybody else.
Yeah, because I was going to ask, how does SARS know the difference?
Yeah, because at the end of the year, so as long as you are within the ambit of Section 11F, I think, it's Section 11F. So there are certain limitations there. If it's not more than 200 and something thousand, you can still deduct that. So it actually allows you to increase. It's just that, so people don't understand that tax planning is actually a wealth generating tool as well.
Okay.
Because we have always just said, we can't do anything about this. Let it go.
So this is what you learn practically, like
Practically.
in the game. It's not stuff you learn outside.
Yeah, no. So I learned theory at school because I wanted to get out of school. But then when I got to work and saw these things practically, then they actually made more sense because of it concretized the theoretical aspect I had.
What about, I'm thinking of another one, late submissions and penalties.
Yeah, no. So if people can just prevent these things, because it's just unnecessary burden, because late submission have penalties that actually just automatically come up, and then they're going to come up with interest. So SARS penalizes you and then it puts interest on it.
Oh, yeah. Or there's the penalty and the interest on the penalty.
That's the thing, yeah. So you then almost double paying, or not double, but you're actually paying more than one aspect of that. And it's just this long back and forth because of, the number of days SARS takes to deal with stuff. They can say 21 days of an audit, 21 business days of an audit. That's almost a month if it's not a month and something.
Yeah.
And so if you have that, and then they can easily just say, after you've submitted the next, or they say, we need more source documents. That's another 21 days. If you look at this thing, you can go for months without actually resolving stuff from SARS. And that process on its own, I think, can be tiring
It can
before the money that you actually get to put out.
And then the penalties get backdated.
Yeah. So they actually, once they kick in, because of it depends on from what are they coming from. Because of, so there are 4 pillars of compliance. Hey, now I'm giving you guys. There are 4 pillars of compliance when it comes to SARS, right? So you have your registration. There's a time you should be registering. For example, if you are let's just say you run a business. The moment you have 1 employee in your business that actually earns above threshold, even you as the owner,
Yeah.
you have to register for employees tax,
Okay.
PAYE, so that you start declaring. If you don't do that, and then SARS picks you up, they can backdate to the moment they pick you up. With those penalties and those interests, right? So it's registration, it's submissions, so filing. Filing is a matter of you have a statutory requirement. The moment you have a tax number of any tax type, you've got VAT, you've got PAYE, you've got income tax, you've got all these different tax types, right? So the moment you have a tax number from those, you have a statutory requirement to submit returns on a cyclical basis. It depends. If it's VAT, it could be bi-monthly, or it depends.
Yeah, VAT every 2 months.
Exactly. There's a threshold as well. Some actually have to submit on a month-to-month basis, depending. Yeah, because depending on the revenue that you're making, then you might be required. There are different categories. There's A, C, the A, B, C. Yeah, exactly.
I didn't know about those. I'm on a 2-month cycle, and I thought, it's a lot of admin.
Yeah. And there are people who do it on a monthly basis. Those are high revenue generators.
That's what I was going to feel. We still have some growing to do.
Exactly. So that's the second one. Then the third one is the declaration. The declaration is the accuracy of the information you are putting in your returns. Is this correct? Because some people just put zeros there, and they don't understand that once SARS picks up again, that's another situation. Mm-hmm. The last one is the payment. If you owe SARS, please pay them.
The first one is registration,
yeah,
submission,
yeah,
declaration,
yeah,
then payment.
Yeah.
And you can get it wrong at any one
of
those,
yeah.
And there are penalties and liabilities at any of these 4 levels. And this is some cool stuff. Do you work more with entrepreneurs, or it's property guys in property?
So I'd say guys in property. We actually have more exchange in ideas and things. I do go to some seminars just to talk, but there hasn't been really a deep dive in terms of engaging entrepreneurs to actually share these ideas. Mm-hmm. Now, I think a few people are actually coming in contact with what I put out there, and then they actually starting to reach out. So maybe it's starting.
Okay. In terms of submission on your 4 levels, because I was asking to get there. For entrepreneurs, one of the things that sometimes is missing is evidence of what they're declaring. Receipts, they don't, let's say you lost the receipts and stuff. Can that be a big problem?
Yeah, it is a problem. I'll tell you why. So SARS has a document retention policy, right? You have a responsibility of retaining all your documents for a period of 5 years. So if ever you're going to claim anything, and by the way, as a taxpayer, you have the onus of proof for the expenses you are claiming, because that's what actually reduces your tax exposure.
Yeah.
SARS has an onus of proving your revenue.
Which is easy.
Yeah, that's easy, because of SARS just needs to say,
statement.
Yeah, exactly, like, this is what we're going to tax you on. Then if you think you disagree with that, you have to then fight that. But they can actually, for example, when they do these auto assessments, they could actually just put your revenue there. They don't have to put your deductions, because it's not their part to prove that. And then they can tax you on the biggest amount. So you have then the responsibility to say, hey, again, prove. So whatever you are claiming, keep those documents. I mean, we have electronic devices now. Put stuff on cloud, so that you don't have to
take photos and load them into the cloud.
Yeah, you can either do that, or you ask even the suppliers to send you soft copies.
Copies of the invoice. That would be smart.
Yeah.
And then file them.
Because
it's one thing to just receive them.
And not know where they are. So you have to know where your documents are. That's the only part that it can be quite serious.
Especially if you don't know how to file them.
Yeah.
Yo, that's some scary stuff.
Yeah.
But I'm thinking now, with all that you're giving, do you offer consultation to people who say, I need your help specifically? I loved you.
Yeah, and that's what they all say. Like when they DM, they're like, no, I want you actually. So because of I then still have the job that I love at the moment, it's actually still serving me well. I'm also within the tax space, so I don't do tax practitioner work. Otherwise, I've actually done the whole tax practitioner, subscription, and all of those things on a SaaS point of view. But I don't. I actually just give people like these ideas when we actually have conversations.
Okay.
Yeah.
Which is good. I thought of one at the end that towards as we close.
Yeah.
Mixing personal and business finance. Where it's mixed masala between the two.
I was going to say, please don't do that. Separate those things. It's just like, so a lot of entrepreneurs, they leave off the business account.
Yeah.
And they don't understand the importance of separating the two. You are prohibited from claiming personal expenditure for business purposes. So now, if ever your bank statement has bread and coffee and
chicken,
exactly, because of those
tops.
things. Yeah, exactly. Tops, exactly. So, and those things gets audited. Those things, I mean, really, you're gonna need to. If you're in a construction business and you have to prove bread, do you get my point? Because you have to tell. You can't be saying, "Oh,
lunch for stuff."
But you need to do a whole lot of that. Is because of the consistency thereof. Because if you're saying that, actually this was lunch for stuff, then you're gonna have to see that every day, because that means you're responsible for bread, right?
Yeah.
Then show us. Then you only did this once. Exactly. So, and why this one day in a month? Do you get my point? So it just makes life difficult for no reason. And this is the suggestion for entrepreneurs: pay yourself a salary.
Mm-hmm.
Don't take money straight from the business account and do what you want to do. Pay yourself a salary. Firstly, it works for you in many ways. When you have to approach the banks or other institutions for finances, banks favor pay slip over annual financial statements.
Which is strange though, but yeah.
The thing is the risk associated with business. So it's not just because they've seen some businesses booming for 3 years full time, and they would have been making serious money. After 3 years, boom, somebody lost contracts, whatever, and that's gone. Which is a little bit different, because I'm saying a little bit on purpose, different from being employed, because we've seen quite a number of retrenchments and economic factors affecting employees these days. So it's not as safe as it used to be, but also it's way better than when you're actually having a business. Because
I was only saying it's interesting because someone was saying my employees can get funding. I can't, but I pay them.
You see? Because it's not, the principle there is not about how much you're making. It's about what you do with how much you're making.
Yeah.
So that's what, and that's a nice example there. When you're saying his employees are getting funding, but he doesn't. Yeah, he needs to learn from there that, hey, listen, I need to be humble enough as well and pay myself a salary.
Okay. So you're saying people should separate the two accounts, pay themselves a salary, then on their personal side, that's when they can do all their expenses.
Correct.
What if someone says, but I still want to find some of my expenses that I can write off through the business?
I know. That's fraud.
Stay away from
it. Stay away from that. Yeah. Anything that you know is personal, stay away from it. Don't claim it as a business expense, because once proven, which is likely to happen, you then lose way more than you could have actually saved by that little amount that you actually claimed.
Okay. Should people be afraid of SARS?
Yeah, very. Very. Remember, you deal with SARS from birth to death. So yeah, you want to be afraid of those guys. And I've seen some people that were wealthy in one generation and they lost all of it after that, because there might have been one person who actually did things right, but they might have overlooked the importance of looking after SARS demands, and that whole wealth disappears. I'm sure you've seen.
There's many stories families like that. And part of it is generational wealth that's transferred to people who can't afford, sometimes even the transfer fees.
Yeah.
It's yours, but the money to access it is you don't have it, or it actually wipes out most of the estate.
Correct. even businesses. So once someone does not take care of SARS or taxes, or treats the taxes as an afterthought, that normally the ramifications are quite hefty.
Okay.
Yeah.
Oh, man, thank you. This has been valuable. You're dropping some cool insights here.
I'm glad.
So I think when you come back, we can focus on entrepreneurs.
Sure. Yeah.
And talk about the VAT is, hey, it was there, it's not there.
Yeah.
And I want to know the winners and losers in the situation.
Okay.
And how it affects entrepreneurs and how they can better prepare themselves.
Sure.
Because some might be scared, but when they shouldn't be.
No, definitely.
So
Yeah.
we'll break that down.
Yeah. No. We can look at that. And I think the interesting thing, we'll be looking on the overall kind of, then we can always get a vet specialist if they want nitty-gritties of what sections or whatever. But we will look on the overall.
All right, cool stuff, man. Thank
Perfect.
you so much.
You're most welcome, man. You are most welcome.
If you have any tax, property, financial literacy questions, pop them in the comments. I will track them for the next episode, for the next recording. We'll do a lot of this because we want you to be financially free. We want you to not be scared of SARS, even if we've just been told respect that institution.
Definitely.
But see you next time.
Definitely. Thank you. Much appreciate.
See you on the next episode. Thank you.